So they say a picture is worth 1,000 words, and we're looking at the last 5 days in the SPX, the S&P. It started and ended red, but it was definitely a record week, and all the indices had strength. The story is the same. We switch to a weekly chart. We see that they are buying every dip to where you can hardly see any red on the weekly. So the base case remains the same. Assume that if we get any weakness, that they will do their best to erase it right away and make a higher high. We watch charts like a hawk every day, and we will see it first intraday, and we will report it back to you in writing that we are starting to see cracks. There are no evidence of that. Maybe on one or two charts here and there, but definitely not at the indice level. Two small observations. We have the laggards, the small caps. I will focus on them this week because they finally got back to the February levels, which happened to be matching the December level, the worst day of last year, I believe December 18th. And the Dow also was kind of lagging, only closer to a high. In fact, it did crack into a high, depends on what you're looking at. And it was probably aided by the news that Buffett was buying into UNH, and it's a significant stock in there. I mean, that wasn't the only reason, but it definitely helped. We do have emotional catalysts. We do have reports coming out throughout the week. I believe Fed minutes come out, I believe Thursday. Double check that. Also, Powell speaks on Friday, so we should. He has the ability to move markets. Another nuance is we will see how his words will affect the bond market. So we're looking at also another potential catalyst, which is actually results, which is what should matter. And I see a lot of retail names like Home Depot is important, Target is important, Walmart is important. So those will probably, hopefully, the CEOs tell us a little bit more about the state of the consumer. We all know that we are stretched to the limits. The U.S. consumer spends like really strong, and a lot of it is on debt. So we'll see how that behaves this week. This is where we're going to start the charting section, and I will start with the TLT, the bond market. But before I do that, we do chart all day, every day, 10 hours. If you ever have a question about anything, a past trade, something you're in trouble in, an idea you want to discuss, we are in the live room all day and it's open to everybody. So if you're a member of Simple Stocks, you're going to come in and everybody's going to welcome you with open arms. You don't have to say a thing. You can listen, or you can ask a couple questions even in private and you'll get your answer. Now, as far as the TLT, I already said that the TLT may be saying something. So if you see this TLT rise, it means the interest rates are falling. The idea of an interest rate is falling. So this week, it had a fall. You can see how it fell hard. That means interest rates, yields spiked. So that should follow the logic of the markets are pricing out the possibility of a rate cut, or at least fewer rate cut, less aggressive rate cut cycle. We'll start with the S&P, SPY. Not too many lines there. Focus on the fact that the purple area is a target that you can measure from technicals. So they broke out from 633 and they got to their target. And last week, even though it was a bullish week, they pushed, pulled, and we ended up what looks like they're trying to hold the 641 area. Now, it's not that bad to lose it because we do have backup support at 638 and 37 and 36. So the bulls will still have the ability to buy the dip and make a high. Just like every other red area, you can see they buy it and they make a higher high. So be realistic. If you're a bear, that you might get 648 or 652 this week. On Monday before the market opens, I will give you what the markets expect out of this. It would look like this. This was last week's. We got to the top end quickly, and then we stalled, and we didn't break out. So the market makers were correct about their estimate, and I will give you that tomorrow morning before the market opens in my morning note. Switching over to the QQQ, you can see that it too hit a magical market move that was predetermined by the breakout from the circle. So that number is 567.5. And you can see that it too is falling into a support zone and backup support. Now, I did mention some strength in the IWM, a catch-up trade. They started it last week like a bat out of hell. And then they hit some resistance lines, and guess what? Wow, the only resistance lines that held up were in here. But nevertheless, they are hitting up against some resistance that's pretty old. So you have buyers that are probably going to try to show up at 224 zone, and the closer you get to 222 through 219.